What is up, and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, I'm going to be doing the indicator special. Y'all seem to enjoy it, and this is where I go through a number of the most popular and some lesser known indicators, and we take a look at Bitcoin through all those different lenses, through all the different perspectives of many of these indicators. If there are any indicators that I don't feature today that you would like for me to talk about in the future, please let me know in the comments below. Let's start off with fear and greed as we always do, and we are still in extreme fear, even though Bitcoin is holding the 50-week moving average. We'll get to that indicator here in a few minutes, but what I am looking for here with fear and greed is to see a bottoming process and a new series of higher lows. So far this cycle, Bitcoin has only had extreme fear 4 times. The time right now, the tariff scare, this was more of a leading indicator. We got extreme fear in March before the bottom in April. This was a 1-to-1 correlation. The yen carry trade unwind when we had extreme fear in August. And then we had extreme fear before the bull run even started. So it is a leading indicator yet again. So the fear indicator, it's not always 1-to-1. Sometimes it is a little bit of a leading indicator if there is some potential downside risk. Now, as far as this month overall, we're negative. We know that we're negative right now. And from what I've seen through different indicators, and I'll show you this throughout the video, is that it looks like there's still a little bit more chop or possible downward price action to go. So we'll see if other indicators agree with that. I'll probably be referencing the log regression indicator as shown here by the rainbow chart. And I know some of you don't like the rainbow chart indicator, and that is fine. Again, I am taking a look at every piece of data. I don't want to just take one piece of data and base predictions off of it. I have a strategy, and I like when the data agrees with each other. And so I think the most important part of the log regression rainbow chart that we've been talking about lately, and again, log scale, factor of 10, and regression means we have diminished returns. It flattens out over time. I've been talking the last few weeks how the log regression from bottom to top stretches more and more each and every cycle. So while there is a popular narrative out there for a 4-year crypto cycle, I believe the log regression stretches each cycle a little bit, and therefore I would not be surprised. It's part of my hypothesis that the top will be later than a 4-year cycle this time around. Now, I do talk about other crypto assets such as Bitcoin mining stocks and altcoins. I do those in YouTube shorts. And so if you want me to talk about one of your favorite altcoins, give you some quick technical analysis, comment your altcoin down below. So let's get started with some indicators. Now, even though this isn't in the indicator menu, to me, this is one of the best indicators, if you will, and that is the Fibonacci retracement, the golden ratio indicator, as I like to call it. And what we see right here with our Fibonacci retracement is that there are these extension levels. I put in the 1, 2, 3, 6 per one of your comments, and the classic Fib extension level is the 1618, right at around 102K. Now, Bitcoin, when it made a move towards that 102K area, yes, we got wicks above, even as high as 109K, but I want you to pay attention to the candle bodies. And this is why I use Heikin-Ashi candles, because the trend is a great indicator. The Heikin-Ashi shows us this. The trend is your friend, and it's good buying into the trend or knowing when to wait for better buying opportunities. So 102K was resistance before. It has been support. It is support again. And some of the next levels that I am still looking for is Bitcoin to get above 155K, maybe even as high as 200K from the 2618 to the 3618. Referencing the log regression again, let's say we get a Bitcoin top in January here. You can see the orange boxes are between 150 to 250K. So let's just meet in the middle and say somewhere in the high 100Ks. And you see how these tops diminish over time. And so the orange boxes, or the orange log regression color bands, that'd be the next logical place to go. Now, Let's start off with our moving averages, and we'll add on the EMA 20, 50, 100, 200, and you can see that Bitcoin is right at the 50-week moving average again. Now, this has been where Bitcoin has bottomed before, and when it bottomed in August of last year, you can see that 4 and 5 weeks later, it retested that 50-week again. You can see right there back in March and April. Again, 4 or 5 weeks later, it tested that 50-week moving average, this time going lower before shooting up. And so I am looking for that yet again, maybe 4 or 5 weeks from now. That would be late November, early December. Maybe Bitcoin is still chopping sideways and testing that 50. And we might get some brutal wicks down. The candle body, as long as it holds the 50, I'm fine with that. But I am looking at all this structural level over here to the left that maybe Bitcoin might have a move down towards the mid 90Ks. We'll see if future indicators that we take a look at in this video agree with that possible prediction, if you will. So I won't go through every single indicator because some of them are just repetitive of ones that we've talked about before. So we'll try to use some of the more popular ones and maybe some of the lesser known ones. Here is the Aurora Super Guppy. You can see that overall, when the price gets underneath these lowest levels, the color changes and then we go bearish. So in 2021, there were some wicks testing those lows, but we stayed bullish. It wasn't until Bitcoin broke under that was a bear market. Now, we did have that mid-cycle top in 2019, the COVID flush, and you can see there was a little bit of a flush underneath. And then it recovered nicely and we went to those new highs. So that level right now is at around 95K. The mid 90Ks, like we were just talking about, maybe that's a sign. It will start tallying these up. What do these indicators tell us? Are they going to agree and keep giving us signs of mid 90Ks? Are some of them saying this is the bottom? 80Ks, we'll see. We'll just have to keep tallying the data as we go along here, seeing what agrees and doesn't agree. I did want to take a look at Bollinger Bands here, and I want to do both Bollinger Bands. This has Bollinger Band with percentile, which can be good at calling some possible local tops. You can see there when we get that overbought area, we do turn red here, and this is some areas to say that we are oversold probably, and so, or maybe getting ready for a move up. And so we didn't hit oversold quite yet. You can see there is some momentum to the upside. As far as the plain Bollinger Band, we can see we are testing the lower end of it. Now, something important to note is that when the Bollinger Band tightens up, a big move is coming, either up or down. So we are tight right now. It is challenging the lower end of it, so it is possible it does come down further. You can see that's where we've bottomed out the last couple times with the Bollinger Band. Ever since the cycle bottom, really, every time we've touched the Bollinger Band, that has been the local low. Sometimes we do push it down a little bit, but this Bollinger Band is getting pretty tight. So as far as what I've seen in the past, when the Bollinger Bands get tight for longer, that means big explosive macro moves are coming in the future. All right, so we'll move on from Bollinger Band to bubble risk indicator. Haven't taken a look at this one in a while. 2017, the bubble risk indicator got as high as 171. In 2021, it got as high as 116. And really this cycle, I mean, the bubble risk is negative right now. The highest it's gotten this cycle was in March of 2024. It got as high as 52. So that is another reason, another tally why I don't think the top is in yet. And I even think this cycle, some of the strengths and moves got a little bit front loaded. So we did have this very strong move up in 2024. All right. And the halving, of course, came before it. Am I on the right Bitcoin chart here? Here we go. I wanted to make sure I had the one with the halvings and the tops here, so it was on a different Bitcoin chart there. But you can see that Bitcoin pumped into the halving in this short period of time. Let's just measure that out. 140 days. So that was, a little under 5 months that we pumped 173% for Bitcoin. And then we just sort of got these flatter moves, some of these casual pumps up. So In my estimation, the more Bitcoin goes sideways, the more that we are getting ready for another move like that. Right now, the bubble risk indicator is saying, you know what, we are not in a bubble as far as Bitcoin goes. The stock market, the S&P 500, this is in a bubble. Our Shiller P ratio is above 40. Last time we had that was the dot-com bubble in 99. And the market still had a year to go in 25% up. But right now, Bitcoin is not in a bubble as far as their indicator is concerned. Let's take a look at the bull market support band. And most of these indicators, I'm going to be taking a look at the weekly. Some I might look at the monthly or even the daily. But as far as the bull market support band, since the market cycle low, you can see we've tested it. And anytime Bitcoin has gone underneath, those have been local lows to buy. And so right now, the bull market support band, we have lost that support. And I'll just have you keep in mind that from those areas we lost support, I'm just measuring out the averages. 13% down from that area of lost support, 13% down. So I'm wondering where the Bollinger Band is right now, 13% down. If we had something similar, again, that mid 90K number has popped up yet again. I think that's about the third time already. So maybe we're going to see some mid 90K price action here before the move is done. At least that's what a few pieces of data has shown us so far. Super Guppy, this is similar to the Aurora one we looked at before, so nothing new. Very similar indicator, 95K it says on that. So there are a couple different indicators. I do like those as far as macro trends are concerned, especially in the bear market. We've taken a look at fear and greed. Darvas box, I do like this one. It shows when we're oversold, when we're underneath the Darvas box. It shows when we're overbought. And whenever we come back into the box, you can see that we'll see some highs and lows, and sometimes the box does get pushed down. So something I'm noticing right now is at these local lows, what do you see happening with the Darvas box? Not only did Bitcoin test the lows of the Darvas box, but it came down even more. So kind of like our bull market support band, we have seen the Darvas box be lost to the tune of, again, about 13%. So, from here, if it did go another 13% down, that's getting into the high 80K. So hopefully not, but that would be something to look out for the Darvas box. I also do have this channel drawn out here. Let's go to the daily just to show that you're maybe wondering what this channel's about. Drew this as we were experiencing that large crypto liquidation move because I was wondering, are we going to get support off the channel? We have these series of higher highs. Maybe we're going to get some higher low support. And maybe that channel is one indicator of possibly holding support. Though I will say, just in my experience, ascending channels make me more nervous than descending channels. When we get descending channels, overall, from what I've seen, is that we get more often than not positive moves out of those channels. So anytime we get an ascending channel, I'm usually more nervous about that. Not that they can't break up. Don Chain Trend Ribbon, this just shows overall, we're on the daily, where we can get some of those oversold low areas. It's nice and color coded. So here in the daily, you can see we can be oversold for a while. On the weekly, this is pretty good at calling these macro lows. So if we ever get another series of red boxes on the Don Chain Trend Ribbon, good indicator here, that's probably a great local low to start dollar cost averaging in for some Bitcoin. So Don Chain Trend Ribbon, like that during the bear market, nothing showing right now. As far as dynamic flow ribbons, I did want to talk about this one. I forget if one of you mentioned it, but I am wondering, are we going to get a little bit of chop, kind of like 2019 here? You can see that when the band goes from green to orange, that we are bearish. And, recently this bull run, we've tested this, but we haven't gone underneath. And this happens when the flow ribbons get all the way down to these lower lines here. And those lower lines for what's this indicator called again? I already forgot. Dynamic flow ribbons is about the high 80K. So the last couple times we've had support here at some of these higher band numbers. Again, that would be a case for the mid low 90s, maybe getting a wick down to there. But it does look like there's a lot of support in those mid to low 90 areas. All right, we've talked about the EMA, we've talked about fear and greed. Hall Sweet. I love this indicator because the Hall Sweet indicator, and a little bit of foreshadowing, this one also compares to the moving average convergence divergence. Now, I just want you to pay attention to every time the moving average turns, the MACD turns green. So you can see right here when we break through the Hall Sweet, that is when we get the green MACD, and getting green on the weekly MACD. We'll get more into the MACD here in a bit, but that is always bullish. And so when we get underneath the Hall Sweet, it's temporarily bearish. And right now we are underneath it. Now to flip the MACD green, we would want to see Bitcoin reclaim around 119K. And then, maybe we see Bitcoin start to make a push finally towards that 150K. But overall, Bitcoin has gone pretty decently underneath the Hall Sweet band. So they're around 20%. I'm just going to take it from where it really last lost support. Again, around 20%. The Hall Sweet band, when it really started to lose, it was up there, 20% roughly. Again, mid low 90Ks, it keeps popping up. And guys, I'm not making a prediction that has to happen, but there seems to be a lot of data, or at least patterns, that the mid 90Ks, at least just with moves we've had before, could be coming next. Now, Ichimoku Cloud, I try to educate myself on this one more and more. I know some people really like it, but right now, to me, this says we're macro bullish, but there is a little bit of micro bearishness. So anytime, I want you to pay attention to the blue and the red lines. When those lines start to cross, that has been when we've had local lows, even when Bitcoin price hit this, what do you want to call that, sort of a grayish band right there. So if Bitcoin chops sideways or gets somewhere to that grayish band, that would be just horizontally 100K. If it got down to it sometime soon, again, look at that price on the right. That's at about 95K. So, we're building more and more of a case for the mid 90K areas as far as these indicators go. Larson line, thank you to the person who recommended this one. Very common indicator here. And Bitcoin has tested the lower areas of the Larson line, the lower area right now. Mid 90Ks, around 97K. So Larson line would have me feeling a little bit better about the market than some of these indicators go. And so, something before I forget that I do want to talk about, just because 2019 it seems to be popping up more in some of these conversations, is that we have the 100-week moving average back here. And I do wonder, where is the 100-week moving average right now? It is at the mid 80K. So if things got really bad for Bitcoin in the near term, I do wonder, would we ever hit the 100-week moving average again at the 80K area? Just something, you got to take it by levels. It's not prediction. You take the market that's given to you, not the one that you want. And we just, in my opinion, these indicators, whichever ones you love, you guys know the ones I love. I think they help you sort of just take it levels at a time. All right, log regression. This one I could not wait to talk about, because you can see these Bitcoin tops when we get into the log regression bands. Now, notice how in this indicator, the peaks are ascending here. So as we get into this band, though, we are overbought. And the upper areas of this indicator, remember what we talked about at the start of the video, 150 to 200K? You can see that right here, low 200Ks, 150K, lines up right where the fib extensions were, 2618, or the 2618 to 3618. So keep an eye on those areas. Bitcoin gets some nice support here, starts moving up. Maybe we get high 100K. So again, I think the most important thing about log regression, even this shows it pretty good, is that each cycle, I just want you to notice how it gets stretched. Imagine a rubber band being pulled, each cycle getting stretched more and more from bottom to top. And I think we are getting that yet again, more of a stretch. And I think that lines up with, even the market conditions. If the market is similar to the dot-com bubble and we have a year to go, 25% up, just like 1999 under similar PE ratio, then that means 2026 is on the table for Bitcoin for some bullish opportunities. So hopefully that becomes the case. All right, moving on from log regression, Mayer multiple bands. I've been liking this one more and more. And I also am going to compare to the rainbow chart yet again, because notice where these bands are. Notice where the peaks are. Okay, the last cycle hit those Mayer multiple bands pretty good. And so if Bitcoin tops out somewhere near that orange band, that would be at the low 200K area. So right now it is sort of getting some support at this yellow band area. We are a little bit overbought. If it came down to the green band, that's all the way at 80K right in the middle. So hopefully that doesn't happen. But if we see Bitcoin continue to do well, you see how we get into the high 100K area for our Mayer multiple bands. And let's keep going. There's not too many left here. The MACD, one thing I've been talking more and more about is how the MACD shows these trends or divergence here. So you see these lower highs, lower lows. And overall, again, I want you to watch the moving average here, the blue and the orange lines, how they move downwards, and it's showing the trend where the strength is going. Now, overall, the MACD, you can see this trend moving upwards. So recently, we have had a lower high here, and we'll see where the MACD bottoms out. Is it going to take us in the negative territory and start to show a trend to the downward direction, or are we going to see more of a sideways direction like we've had recently with the MACD? So you see these three big peaks over here for the MACD. In the last cycle, of course, we had the double top. And so there were two tops in the MACD. 2017, we just had that singular peak. So if you're looking at patterns, a bearish person might say, you know what, 4-year cycle, we had one MACD top, two weekly MACD tops, three, the cycle's over. And you might be right. That's one piece of data we have to consider if things are bearish. But again, what I'm looking for overall is the trend. Now, if the trend starts to go downwards, then I'm going to be feeling increasing likely that, maybe the 4-year cyclists were correct this time, even though we don't have confirmation of that yet, right? They might be right, but, we don't have the benefit of hindsight, as one of you once said in the comments, which is very true. Pi cycle indicator. Now, I want you to pay attention to the yellow and the orange moving averages. When the yellow crosses above the orange, that's when we get those pi cycle tops. Right here, that was alt season, not here at that top. And, we've had a pattern occurring where we get that pi cycle indicator, and then we have a mid-cycle top on the pi cycle. Trigger the pi cycle, that was alt season, and then mid-cycle top 2024. So again, we are stretching out, and that pi cycle top, wouldn't you know it, is at 200K. So there are macro indicators we've been looking at to say high 100K, low 200K, that is still the target for the next major top. How soon we get that major top, who knows? Let's go to RSI. And overall, the RSI, this is bearish. It is bearish divergence. We have these lower highs in the RSI. Strength is going down, and we have price going up. Now, what I will say is the RSI, notice these three peaks, and I've noticed that we had a similar pattern last cycle. We had three descending peaks in the RSI in 2021 into 22, but also do notice this isn't too far from where the RSI bottomed out, where we got the final flush. So let's say something similar like this is playing out, where we get these three peaks and then a flush. Well, I would contend that even though the RSI isn't a 1-to-1 ratio, when we got these three peaks, the cycle was over and there's just another flush down. So if we got a similar move, I don't believe the cycle would be over, but I would be more along the lines of, maybe we're seeing something like we saw in 2019 where we had our mid-cycle peak, we're getting a flush down, and resetting for the final move up. So maybe that 100-week moving average comes back into play. But if we do break this horizontal support here for the RSI, you see that the RSI has not wanted to go under 44, and that's right where the RSI is at right now, or pretty close to it. Let's even say 43. If the RSI starts breaking down to the oversold areas, watch out for price action. But the one bullish narrative I would say is that maybe Bitcoin just needed to flush out all the longs, and then it would be time to attack the shorts that pile in, because people would believe the 4-year cycle's over and they'd be trying to short it down. and we've seen the longs get flushed out on the way up, with these big moves down, then I think if we did get a big move down, then it would be time to flush out the shorts and see Bitcoin go parabolic. So I do wonder if we're in store for, let me just reference this. We haven't had any of these big pullbacks like we had, 2019. It only shows pullbacks in the uptrend, or 2017. I've been hardened by this experience. So we haven't had any of those. Crypto's going to crypto. We did just have the largest crypto liquidation event ever, right here, I'll say. And we're still bullish. We're still above the 50. We're still bullish. So I don't think crypto has gone full crypto yet. And that does scare me, and it should scare some of you, but I don't believe the cycle's over. As far as relative strength money flow ribbon, this one I was looking at is good at calling the lows, some of the highs, or it just shows where we're overbought. And we're overbought, and so if we start getting some of these yellow bands, this would be an indicator to keep an eye on for possibly catching a low. All right, let's go to relative volatility index. This is one I looked at not too long ago either. Volatility is vitality, and I would like to see volatility start spiking up, and that's how we get those highs. So right now, volatility is low. And so, I'm sure retail sentiment is also low. So this is where I make some positions or position myself for some longer term plays where I believe there are discounts. Reverse Cutler's RSI, we get these boxes printed when we are at local highs or lows. Right now, we don't have anything, but we might start getting an oversold box sometime soon with where the Reverse Cutler RSI is. Nothing confirmed there. So maybe the bottom isn't in yet. Stochastic RSI, I like taking a look at this one on the monthly as far as macro goes. And you can see how we can stay overbought or oversold for a while. And right now, the stochastic is going oversold. So I do wonder, are we going to hit oversold sometime soon? And that'll reset us for another move up to the top. Maybe 2026 is going to be overall bullish for Bitcoin. I know that's not a popular theory or sentiment out there, but I do think there's some indicators saying that could be possible. Super trend, this one is pretty good at just showing where the trend turns bearish and bullish. Again, going back to the 2019 mid-cycle top, here was where that super trend was broken during COVID, and that was around that 100-week moving average, if you remember. And here the super trend is at around 92.5. So again, we might, if we see a move down there, people would no doubt get nervous because we have tested that super trend before here in August 24, the yen carry trade unwind area. So the mid 90Ks, they continue to pop up. And, it's just something to be ready for. Not saying it is going to happen, but if it does, look for structure, look for support, maybe a good local bottom. Ultimate RSI, love this indicator. This is showing overall that we're getting towards the medium line of oversold. Maybe that's where we stay. Maybe we go further, going over to the weekly, just give us a good perspective of this. Yeah, we have these three tops. Hopefully, we don't get too oversold on the RSI, even in 2019. I do like the ultimate RSI for this reason. It kind of combines everything together. So if it's able to hold support somewhere in the 40s, I'll be feeling overall okay about Bitcoin. And any other volatility, Gaussian bands, I'm not sure. Yeah, does this show us anything different? It's just showing us pretty much where the moving average is at 100K. Some of these indicators, I've seen other people recommend them, but here's what I'll say about indicators, guys. Again, just put a nice cap on it. I have my own indicators I love. As you know, I have the moving averages. I use my fib levels, and, I use the MACD or the buy signals quite a bit. So let's re-put on that fib here. And I like the buy-sell signals again, too, because I think this is a good Heikin-Ashi buy-sell signal indicator, the 1020 MA crossover. Show us when there's shop. Also, the green weekly buy signals tend to be good at calling some big moves in the market. If you're waiting for more confirmation, you could even go monthly. And this would be concerning right now. These are Heikin-Ashi candles, and you can see the last time since the bottom, 2 weeks, 3 weeks red, 3 weeks red. But from the sell signal is 2 weeks, or I'm sorry, 2 months. And so this would be showing us that if we repeated this pattern, even if it went sideways, that we would get another negative month going into December. Do I believe that? Not quite, but stranger things has happened, and the Heikin-Ashi, this could be showing us the start of a trend. Hopefully, not a long one. I didn't want to end on that note, but hey, I didn't know we had a monthly sell signal there, but there you go. Maybe that's how we hit the mid 90K areas. Anyways, let me know what you think in the comments below. I like doing this video. If you have any indicators you would like for me to feature, please let me know. And really, this is just to have a conversation and to take all the different pieces of data and say, what is the common theme? And I don't know if you guys agree, but I think the common theme is watch out for the mid 90Ks, that the sell-off move is not done yet, and that somewhere in the high 80 or the high to mid 80K area may even be tested underneath the most extreme circumstances. So I don't believe the cycle's over, but some of those indicators have not truly been tested, and we have not seen crypto go full crypto yet. We had the largest liquidation event ever, and we're still above the 50-week moving average. We're still bullish. So I don't feel like retail has really endured all the pain. And maybe we get that 94K flush sometime soon. So we'll see. Anyways, let me know what you think in the comments below. Do you feel these are more bottom signals or that there's lower to go? Curious to hear all of your thoughts. Thank you so much for watching. Have a great day.